It was a quiet day in the U.S. stock market as we closed mostly flat across the board. However, it was enough of a boost over recent days that we now have all four of our major U.S. equity indices with a bullish intermediate term posture. News stories today pertain to, of course, the ongoing Boeing saga. We also saw the Senate come out and reject President Trump's plans for a national emergency around border wall funding. We see that there's a particular sector of technology that is having a lot of components reporting after the bell tonight, so we'll check in on those. And then I also want to stick within the technology sector for our trade application example. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's March 14th, 2019. First of all, if you're new, we'd invite you to click subscribe over on our YouTube channel. And while you're over there, go to our description area where you can find a link that will allow you to sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZee. Remember, anytime you see our tweets regarding the Market Outlook video, we'd encourage you to click like and retweet if you get value out of these daily digests. In addition to that, we're also on Facebook. You can check out our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into our charts. As you can see, I've got chart 4B pulled up here in front of us for those of you that are premium Market Scholars subscribers. This is showing us the foregrid of the major U.S. equity indices, and as I mentioned in the intro, we did finish mostly flat today. We were down 0.09% on the S&P 500. We were up 0.03% on the Dow Jones Industrial Average. We were down 0.16% on the NASDAQ Composite. Then we did get a little bit more movement out of the Russell 2000. It was down 0.4%. So that was our biggest mover today, but even that would have been considered quiet. Remember, you can read these labels on the chart, and when you see them blue, like we have them in all four of these charts today, it basically means that we had a very modest day in terms of range. Remember, if we have a really wide range day, meaning that there's a big distance between the day's high and the day's low, you'll see those labels turn orange on those particular days. So if you just glance at this four-grid setup and see that those labels are all blue like they are today, it just reminds you that it was a pretty quiet day, all else being equal. One thing that I did want to point out is that the Dow Jones did revert back to a bullish posture as of today. Now you'll notice down below that green line, which is what we use to set our posture using the market forecast technical indicator, appears to the naked eye to be flat, but you can read within this label right here where it says the intermediate line is at 64.90 and rising. That's why that color background turned to green right there to signify that we now have that bullish posture now that the line technically did move higher again despite it being visually flat. So we'll keep our eye on it. Obviously, it's not a dramatic move by any means, but it is noteworthy just considering the Dow was the last one to kind of attain its bullish posture in the most recent time period. And again, big measure of that, or big reason behind that is the stress that Boeing's share price has had on the Dow Jones Industrial Average in comparison to its impact on the other indices. And so anyway, good to see that we do have reasonably strong markets here with bullish postures across the board. Let's go ahead and take a look at our next chart setup now. This one will be chart 4C. This will be our three green arrows chart. And as you can see here, we've got a mix of green and red arrows on all of our charts right now. The reason I can tell that so quickly is that the background colors behind the current candles of all four of these charts is white, and it signifies that we have a mix of green and red arrows. Remember, when we have three red arrows, the chart will turn pink like it was here. When we have three green arrows, it'll turn green like it was here. So right now, again, it's more of a mixed bag. Not a big surprise there, as you can see when you're looking at the candles of all these charts. The last few weeks have mostly gone sideways. Maybe there is a upward bias to the market right now, but it has not been robust with a ton of momentum the way that we saw at the beginning of 2019. Moving on now to chart 4D. This is our 1040 crossover method. Notice that 3 out of the 4 charts do have bullish crossovers at this current time. And as a reminder for those of you that might be new, when we're looking at chart 4D, these will be 3-year weekly candle charts. And so when you're looking at the orange and the blue lines on the charts, they represent the 10-week moving average and the 40-week moving average. And when the 10-week moving average goes up and over the 40-week, then we start seeing that bullish crossover. Some of you might refer to it as a golden cross, and we've got the background colors of the charts coded to turn green to make it nice and easy visually for us to see where the crossovers are taking place. So you'll notice that the Russell 2000 at this point is the only one that continues to hang on to its previous death cross or bearish crossover, but we're even getting close on that one. Notice that we had a little bit of a stalling out on the Russell 2000 last week where it went sideways here on the MACD2 lines that we've got plotted down below, but then we did kind of go a little bit higher here this week, so we're inching our way towards that 0 pink line right there. And remember, when that black line crosses up and through that pink line, that is basically signifying that we do have a golden cross that will be taking place there as well. So not a whole lot to report that's new on that front. We're still waiting for the Russell 2000 at this point. Let's go ahead and look at our 12 grid analysis now, and this is chart 4E. And as a reminder, when you're looking at the background colors of these charts, the pink background will tell you if we have a bearish posture using the intermediate term line on the market forecast technical indicator, and then a green background will tell you we have a bullish posture. And so as it stands right now, keep in mind that the VIX remains very low. And so for those of you that are options buyers, perhaps you're able to buy those options cheaper than you would be able to otherwise when the VIX is low. It doesn't maybe help the option sellers quite as much in this environment, but nonetheless, that is where we find ourselves. Not a whole lot of fear in the market right now. In terms of the 10-year Treasury yield, notice we did get a little bit of a bounce today. We were up about 0.73% on the TNX here. We did receive an oversold cluster signal yesterday, but these signals on these treasury yields really haven't provided much in the way of reversion to the mean on an immediate basis in the past. Notice that in 2018 we had several of those green dots showing up on the chart there, and so most of the time you continue to drift lower there. So just because we finally got one right here recently doesn't necessarily guarantee we're going to get a big pop higher. So we'll keep our eye on it, but we did get kind of a one-day break there. And of course, the flip side of that is TLT, which is right down below. That tracks U.S. government long bond prices rather than yields. It sold off today. So remember, when yields go up like they did, the prices of bonds go down, just like you see right here. So kind of stuck in no man's land right now on TLT. As I mentioned in a recent presentation, could be an interesting candidate for maybe an iron condor. All right, moving over here to some of the bottom rung now. Notice we did get a bounce on the US dollar, but it just wasn't dramatic. So we had 4 prior down days before that. We were up today 0.31%, so it's good to see it bouncing up and away from that rising moving average there, but it wasn't emphatic in doing so. It was more of a spinning top type of a feel to that candlestick today. So we'll have to continue to monitor that. Notice that gold had a really terrible day. Gold was down 1% today. And how it was down 1% is equally as important, because you had this reversion to the mean back up to this downward trending moving average. It rejected that moving average, which is typically the fear, and end up having a bearish engulfing candle here today when you look at today's body engulfing yesterday's body. And so that was a pretty ugly looking candle on gold. Probably means that it's worthwhile being a little bit more cautious or hesitant towards that particular commodity and the gold mining companies that are associated with it until proven otherwise. Notice that ag commodities did rise today, and we've been watching this one for a while because it's been in such a significant downtrend that we started to get a couple of these oversold cluster signals here. Finally getting that reversion to the mean here for the last 3 days. But as I've been mentioning in recent weeks, be leery of this because just because we get a oversold cluster signal doesn't guarantee that the trend will change. In fact, that's not the expectation. The expectation is that we get a short-term reversion to the mean type of a move, but not necessarily that's going to break the downtrend. So, with DBA, as we approach this downward trending moving average, the thought is that that will be a place to sell this, not to buy it, unless it slices straight through it and gives us further indication. You can see that crude oil has been holding up like a champ here lately. In fact, we're at 3-month highs on crude oil right now, and have actually gone up for about 4 sessions in a row on that futures contract right there. So that's a pretty healthy uptrend that we're seeing out of oil here, and of course that helps support a lot of those energy stocks that are out there as well. Let's go ahead and take a peek at our next one now, and this will be our foreign stock markets 12 grid. So as this comes up here, notice that it's mostly green across the board, so that's a promising sign. The only exceptions to that currently are China and South Africa. Remember, South Africa has a little bit more of a impact when gold prices are fluctuating like they were today. And so not a huge surprise to see South Africa down a touch here today. However, notice South Africa is getting an oversold cluster signal. The last time we had a cluster signal was when we got these overbought cluster signals back here, and those worked pretty nicely because that was basically the top end of the move. It rejected it and immediately went down. So it's possible we start finding a little bit of support here on South Africa, knowing that we have these oversold cluster signals, might get a little bit of a reversion to the mean back to the top side. Other charts that are out there are all green, and that's a positive sign. Not all charts look great from a trending perspective, but there are a couple that I'll point out that are catching my eye. First of all, India has been on this just massive move higher for the last 2 to 3 weeks, and it was up yet again today, so it's a fresh 3-month print there for India, up about 8.88% now over the last 3 months. And then the United Kingdom, a lot of talk about Brexit and different things like that. I happen to notice that ticker symbol DEO, which is Diageo, which is it's a spirits maker for those of you that are Captain Morgan fans out there and Johnny Walker fans and what have you. It was a stock that we focused on a couple of years ago in my dividend class. I noticed that it had been doing quite well here recently. So remember, there are a few of those ADRs that we can trade in the United States that are based in the United Kingdom. So if you don't necessarily want to trade EWU, which is what we're looking at here, perhaps there are some individual securities that you could pick out there as well. But things are looking pretty robust right now in terms of the stock market performance in the United Kingdom. Let's go ahead and now move on to the United States. And you can see here, this is chart 4G. So a reminder, the chart in the upper left is going to be the S&P 500, followed by the 11 different sectors that make up the S&P 500. Right now, the only pink chart on the board is industrials. And if you think about that hard enough, you'll probably understand what the reason behind that is. And of course, that is likely due to a lot of the controversy within the airline industry right now. Remember, Boeing is considered an industrial company, as are all of the individual airline companies like Southwest and American, etc. So anyway, I have a feeling that particular story is affecting industrials, whereas it's not necessarily impacting the rest of the sectors in the economy. So it is good to see that we have nice, healthy looking charts here in the United States. Note that XLRE hit a new 3-month closing high here today, and that's real estate in the lower right-hand corner. Utilities hit a 3-month intraday high. However, it did end up pulling back in the middle of the day and actually closed a little bit lower. So that was interesting as well. But otherwise, the other charts are just holding up there pretty nicely. The one I did want to point out, because it'll affect our conversation when we get into our trade application example, is technology. That's XLK up here in the upper right-hand corner. Notice that it did have a 3-month closing high here today. It did not have an intraday high. That was yesterday. But on a closing high basis, we did get a new 3-month closing high as it finished 0.21% higher here today. So that's a nice, consistent upward trajectory there within technology. Now, there were a number of technology companies reporting after the bell, and so I thought maybe we could check in on a few of those, see how they're coming in. First one I wanted to look at here was Oracle. And Oracle, it's kind of been all over the map, but right now we're up just a hair. Right when it was released, immediately after the market had closed, Oracle did go up to about 54. That was the high print here, but you can see it's kind of settled back in here closer to about 53.12 or so. So kind of back to where it started, maybe up a couple pennies. So we'll keep our eyes on that one going into tomorrow's open. Jabil, I believe, was another stock that reported this afternoon. That one is up a touch as well. Again, not a dramatic move. We did have a big move right out of the gate up to 28.65, but it's now settled back down to about 27.60 or thereabouts, which is a good 20-30 cents higher than where it closed today. So at least it's not disappointing. And then we also had Adobe. Of course, Adobe has been one of the best growth stocks in the market here in the last couple of years. And Adobe did come out. Initially, the stock went up about $4, up to 272, almost 273, but is more recently sold off here. We last traded at 267. 69 here according to this chart. So the bid ask is lower than that, so we'll have to see how to reconcile that, but we'll find out of course by tomorrow morning as well how that's going to come in. But a lot of technology companies still reporting here, so don't forget about those. Now to talk about our trade application example for the day. I'm going to flip back on over here to chart 4A in this case, which is a market forecast 1 grid. And I wanted to pull up one of the most well-known stocks on the planet, which is Apple. And, excuse me, Apple has a big company event coming up here. I believe it's on the 25th of March. And the expectation is that they're going to announce a new TV streaming system or device, or who knows. You know, they like to keep things somewhat close to their vest and keep people guessing, but that is the expectation right now. And so as you can see, Apple's share price, like a lot of tech stocks, has done reasonably well here recently. We've actually gone up for 1, 2, 3, 4, 5 straight days. So we're in a nice upward trajectory, and that's a good change of pace, because you will notice that prior to that, we were mostly going in kind of a sideways trend there from, let's call it, you know, beginning of February until beginning of March. We spent basically 1 month going sideways, and then we spent the last 5 days going up. So it does look like it's trying to break out to the upside, perhaps in anticipation of, you know, what the market could perceive as positive news with this big company and event coming up. So one way that you can try to take advantage of moves like that, of course, you can buy the stock if you wanted to. You could buy calls. Many of you are familiar with that idea of buying calls, which is a leveraged way to kind of exercise your judgment of a bullish stock. The downside of buying calls is that they are generally considered low probability trades, because time decay is working against your trade. And so one way to kind of rectify that situation a little bit is by selling another call against the call that you're buying, and kind of create what's known as a vertical spread. In this case, what I want to work on here is what's known as a long call vertical spread. So let me show you how that would work. I'm going to come back on over here to the trade tab. And as you can see, I've already got the trade pulled up down below. But what I'm focusing on here is the April contracts with 35 days left until expiration. The way that we usually do these is we buy one that's in the money and we sell one that's out of the money. And so we stick with the call side of the equation, which is on the left-hand side here. And you can see that the first one that's in the money, notice the first one that kind of has this yellow shading in the strikes, is the 180. That makes sense. The stock is trading at 183.73 as of this moment in time. So that's the first one that's in the money. So that makes the next one, the one that's not in yellow shading, the one that's kind of white right there, that's the 185 strike, is the first one that's out of the money. So as you can see, I've loaded that up down below. Now, of course, the nice thing about dealing with Apple is that you're not alone. You're probably a very small fish in a very big ocean of lots of other traders out there. And so these two contracts are very liquid. You can see that we've got 68,000 contracts traded at the 180 strike, and then another 40,000 traded at the 185. Now, when you load that particular long call vertical up, this is what it looks like down below. Notice that the +1 represents the 180 call. So that would be like if you just went out and bought a call outright. But as I mentioned before, you do have a low probability trade because time decay is working against you. So the selling of this other strike, so we're selling the 185 call with the other one, helps us offset that to a degree, because when you're the seller of the call, you tend to make money on time decay. So will it completely offset it? Not in all cases, but it does help finance the cost of the trade. Now you will notice this trade in this case is going to still cost $2.93, or for one contract it'd be $293. Now the reason that this one kind of stood out to me is because it's a nice head start in a race if you are bullish on Apple. And what I mean by that is when you look at the break-evens on a trade like this, basically what you're going to do is you're going to take the strike that you're long, in this case the 180, and then add the debit of the trade itself to that strike price. So in this case, $180 plus $293 is $182.93. Well, notice the stock is already trading at $183.73. Remember, another way to do that, if you don't want to do that math yourself, is you can just come here to confirm and send, click on it once, it'll show you what the break-even price is right here as well, $182.93. Well, again, that's a little bit odd considering the stock is already trading at $183.73. So in other words, if you fast forwarded 35 days to where we're at right now, and the stock didn't budge a penny and it closed exactly at where we're at right now, it's an automatic win. You just need that thing to be over 182.93 to lock in gains. Now, obviously, you'd like to see it up and over 185 if you can get it, because that kind of ensures your profit to a greater degree. But, you know, it's nice to see these types of trades that exist where we get a head start. And we've seen this before. I've highlighted some trades like this in the past, but oftentimes what we see is that we get a head start of maybe 15 to 20 cents. This one's a little bit wider. This one, you know, we're looking at a good, in this case, 80 cents difference between where the break-even price is on our trade on the long call vertical versus where the stock is currently trading right here, right now. So again, this is a bullish trade. We want Apple to be trading above 185 on expiration day, 35 days from right now. But even if it just goes sideways, we still could potentially make money on this trade. And that's not always a guarantee with these debit spreads. Remember, when you want to make money on sideways trades, oftentimes you're the sellers of spreads. If we wanted to be bullish, you would be selling a bull put spread. So this is a little bit of a different story where normally we need a big directional nature to our trade in order to profit on a long call vertical. But in this case, even a sideways move out of Apple between now and expiration could potentially result in profits for our paper trade here. So I'll go ahead and send that off. All right, well, I want to thank you for joining me here tonight. We're going to keep it nice and short. I've been battling a cold all week, so need to get back to resting up a little bit, but I want to thank you for checking out the video. If you got value out of it, I would encourage you to go over to Twitter, click like and retweet. Also over on Facebook, give us a thumbs up. David should be back in the saddle with you tomorrow. Enjoy your St. Patrick's Days and enjoy your weekend as well. We'll see y'all next week. Take care, everybody. Bye-bye.